The futures markets have dropped significantly over the last couple days. The RBOB futures contract has dropped by about 14.5 cents. That would indicate that gasoline prices are coming down at the wholesale and spot level, but there's one particular market, actually a couple particular markets, where that has not been the case. For example, in the Pacific Northwest, gasoline up there has traded at 55 cents over that futures number, and that's due to a natural gas pipeline in Canada having a rupture and having to be shut down. Natural gas that supplies those refineries in the Pacific Northwest, they've had to slow down their production, and as a result, gasoline supplies have become a little bit more tight. That probably won't last too long. There's been talk of that pipeline already getting restarted. At the same time, California prices have gone up as well, as the expectation is that they're going to be short in the Pacific Northwest, so some barrels are going to make their way to the Northwest. Meanwhile, in the east of the Rockies markets, gasoline prices at the spot level, where bulk trades happen, has dropped below $2 a gallon, and in some cases below $1.90 a gallon. This should result in some cheaper wholesale prices, and at the same time help out rack to retail margins. So those who are selling fuel to the retailers should be looking at some pretty solid margins over the next couple of days. When you look at some of the EIA data, you would expect that gasoline supplies would be dropping considering refinery maintenance is going on, but that wasn't the case this past week. Gasoline inventories were up. On the East Coast, they've moved across, total gasoline inventories moved across 70 million barrels for the first time in about 18 months. So gasoline supplies there seem to be pretty comfortable. Gasoline demand looks like we're starting to see some of that fall demand destruction over the past couple of weeks. The 4-week average, according to EIA, is actually about 2.6% below where it was last year. We'll have to wait to see what kind of impact on demand that Hurricane Michael had on the southeast. Meanwhile, while everything else is kind of fallen here, diesel's held up reasonably well. The futures market has dropped by about 9.5 cents over the past couple of days. And that's actually a little bit less of a drop than gasoline, obviously, and also on an equivalent basis with crude oil. As a result, I would expect refiners to really kind of focus on producing and supplying diesel as demand still looks to be strong. Exports came down week on week, but exports in general have been pretty strong for distillate. So I would expect that the returns on diesel to be better for refiners, and they're going to focus on making that in the short term.